Welcome to RANsquawk's e-morning briefing for Monday the 12th of October 2009. Firstly, just a bit of a review of the weekend and overnight press before we get into where we stand at the moment, just through 9:30 now in London. Starting off then with the US, some comments out of Fed's Bullard over the weekend, who says Fed will keep rates steady for an extended period. Rate outlook will depend on economic performance. Bullard says US unemployment rates may rise above 10%, says the housing ceasing to be a drag on the economy. It says for now there's little inflation risk, but Fed's balance sheet a mid-term inflation risk. Elsewhere, Bullard added that 2.5% to 3% US economic growth is a reasonable forecast for 2010. Elsewhere, some comments as well in regards to earnings season. Obviously, we've already saw Alcoa last week exceed expectations and get things off to a positive footing. This week, attention will now turn to the major US investment banks. Press towards Goldman Sachs, who are set to unveil huge profits this week, which could be as much as 3 times the level of last year, as according to the Sunday Telegraph on the front page of their business section. The news comes as a result of better business conditions, but the size of the rewards will set Goldman on a collision course with governments on both sides of the Atlantic, who obviously, having given various amounts of state aid, will be questioning how and why these banks are now making such sizable profits. Goldman's does lead the series for this week. We'll also see JP Morgan, Citigroup and Bank of America. They're also set to unveil bumper profits. Elsewhere, quite a lot of continued coverage in regards to some of the falls we've been seeing persistently for the US dollar. The FT Times and Journal all saying the case for a weaker dollar, as the fall in the dollar's exchange rate would be a very useful combination and contribution to a global balance to aid the US economy. The Times also reports that the White House is okay with a gentle dollar fall, but fears a collapse, with the Journal stating that the dollar side is set to continue this week. However, so far this morning, the dollar index is actually trading higher, around 0.25% at the moment. Also, Fed's Bullard did say he doesn't see much alternatives to the dollar. He says he doesn't see much, despite the role, or doesn't see much dispute in terms of the role of the global currency for the US dollar. Just taking a look in terms of other news, most notably coming out of the UK markets, is the latest report from the Centre for Economics and Business Research. They've said that in their latest UK proposals, the bank rates in the UK will remain at 0.5% until 2011 and not reach 2% until 2014. So in light of some of the most recent market developments, we have seen the likes of Reserve Bank of Australia increasing rates last week. Obviously, many now looking to who in the G20 will be next. Seemingly then, from this somewhat bearish report, rates in the UK to stay low for some time, and cable has traded down as much as 100 pips this morning, and it has led to some outperformance for gilt futures on life. They also say that in terms of QE, the Bank of England will push on with further than the 175 billion already announced, and that the programme asset sales will not start to be rolled back until 2014 at the earliest. Taking a look in terms of other specific equity news, obviously the Philips story has been the main thing in Europe. That's also had a crossover effect for some of the other tech stocks and tech in general, the outperforming sector this morning. Siemens in particular, the second biggest gainer in Europe and the best gainer in Germany so far. Elsewhere in the FTSE, Lloyds Banking Group, they're preparing to push the button on £11 billion rights issue in the next 2 weeks after lining up a powerful syndicate of investment banks. For Xstrata, the company's hostile merger approach for rival Anglo American is expected to be ditched in the next few days. If so, the company will not be able to make a further bid for another 6 months, according to the Times. For BG Group, they've received an unsolicited offer for part of its £1.5 billion power and generation business and could announce the sale imminently, according to the Sunday Times. And at the moment, in terms of the actual FTSE index in the cash, we have already this morning, with the uptick in equities, crossed over 5,200 point level, which does mark a yearly high there. Take a look there in terms of the calendar. We've already had the Japanese players out for a market holiday there. The US will also be, in respect of the Columbus Day holiday today, pretty much most markets as per normal in terms of New York Stock Exchange and NYMEX, as well as CME Globex. However, the floor will be shut today in Chicago. And in terms of the actual schedule itself, is extremely light, no major data out of Eurozone or the US. Speaker-wise, just Geithner due at 5 o'clock, and also be eyeing reverse auction for the Bank of England this afternoon. Targeting maturities in March 2022 to Sep 2034 today.